All right. What is up, traders? What's up, tycoons? Super excited for today's video. This is going to be a really good one, really quick, short, and sweet. We're just going to focus on tech right now, specifically the NASDAQ. Now, I'm recording this on the MacBook without the microphone and without the webcam. Let me know how the quality turns out, okay? Redoing the office, and normally I record on my PC, but the picture quality has been turning out 720p and not 1080p on the last few videos I recorded. So we're just going to go right off of the MacBook here. Now, what we've got is the weekly chart for the NASDAQ. Okay. And I want to go over a few simple things, right? And kind of just give you guys a technical analysis tutorial, kind of guideline and the way that I like to do it. All right. So I'm very big on the Fibonacci's. This isn't going to be a Fibonacci guideline or tutorial or walkthrough or anything like that. We're going to come in here, right, take the previous all-time high, right, come down here to the lows that we had in October of 2022, right, and this is going to be our guideline, right? So these are, basically the next bullish price target, right, for the NDX for the NASDAQ is going to be 20,700, right, roughly 20,000, 21,000, where we're aiming for, okay? And then, I'm going to come in here and I'm going to draw some key zones, right? So we'll come in here and I don't have all my favorites pulled up on the MacBook, so just bear with me, all right? So we're gonna come here and there's a little bit of a zone, right? A little bit of a zone in this area here. Okay, some previous overhead supply, right? And you can see right here, we kind of check out, have a little bit of a false breakout, we check back, undershoot it a little bit, and we get a classic scoop and score and move to the upside, right? So this is a pattern that you're gonna want to be buying, by the way, right? I think for, not just this year, but in general, this is a very, very buyable pattern, and this is the type of pattern that you want to be buying, okay? And what I mean by that is these large bases, okay? These are multi-year bases. We're on a weekly time frame, 2022, 2023. Here we are in 2024, breaking out, right? So, you have this area here of overhead, previous overhead supply, previous all-time highs, right? And then, a large rounded bottom here, a large base. And then again, you get a little bit of that false breakout, okay? Now, a false breakout in a bull market is a continuation pattern. It's not a sign of a reversal. So remember that right now, okay? False moves can lead to fast moves, and we can often see them lead to a large check back. But those aren't complete reversal patterns, right? Now, the next thing we're going to do, all right, and I always start off on a weekly time frame, is we're going to come here and put the 10-week moving average. Okay, now let's do some simple math for you guys that don't understand. The 10-week moving average is basically the same as the 50-day moving average, right? 50-day simple moving average. Why would that be? Well, because there's typically 5 trading days in a week. 5 times 10 weeks is, 50 trading days. So a 10-week moving average is, almost aligns perfectly with the 50-day simple moving average. And what I want to do here is show you guys what happened the last time we had a large bearish candlestick, okay, crossing below the 50-week moving average. Well, that was going to be right over here, okay? Right over here, we see that. We see a large bearish candlestick here. And what do? Well, we end up retesting that 10-week 50 SMA and continuing the downtrend, which is something that I think is a possibility. Okay, is that, hey, we could be getting a little bit oversold here, right? There are some hidden divergences, and we won't, dive into those too deep. But if you take a look, here, right, and we draw that point on the chart, that's going to be right over here. And then we take a look here, and we take a look here. We have some divergences, okay? And in this case, the RSI is making lower lows. The price action's making higher lows in this case. Now, oftentimes these hidden divergences just lead and show you the primary trend or change in trend. And we can see that the change in trend and momentum is down. But oftentimes these can be bounce signals, right? And, when you're making lower lows on the RSI, but price action is making higher lows, they often call that a hidden bullish divergence, and it may result in something like this happening, right? Where, last time after we pierced through with a large bearish candlestick, ended up coming up and retesting that 10-week moving average before dropping down lower. And so we may see something similar to that, right? Now, it may not happen immediately, right? We may come down into this prior supply. Okay, old supply, old resistance turns into new support. We may do something like this and then check back up to the 10-week moving average. These are all some scenarios to think about. But now that we've done this, okay, and we've taken a look at a weekly time frame, we'll go ahead and zoom down now to a daily time frame, right? And we're going to just kind of show how we do our analysis a little bit more. Now we'll go ahead and switch this to the 50 SMA because now we're on a daily time frame, and so we want to kind of just keep track of that 50 SMA. You can see it's still in a very similar spot, but the structure of the line kind of just changes a little bit, right? Now, the next thing we're going to do is we're going to drop a WAP, okay? Now, that's a term I want you guys to get familiar with, and this is what I mean by that, right? So we're going to go to the all-time high candlestick right here, and we're going to drop a WAP, right? This is a anchored volume weighted average price. Now, we're anchoring it to the all-time highs. Okay, so what this lets you know is that the average buyer and seller is underwater right now if they bought at all-time highs, okay, from this specific point in time. Now, we also want to drop a WAP at the year to date. So we're going to go back to the beginning of the year, okay? This is December here, December. Here we have December 29th. This is January. So we're going to drop another WAP on the beginning of January. This is going to give you the YTD, year to date, okay? So you can see the average buyer from the year to date was in control all through this period of time until Wednesday, April 17th, when we pierced below. And now the average buyer from the year to date is underwater, right? And when you look at these things, you really just want to understand and use these anchored VWAPs the way that I'm describing them, right? Is, hey, above, the average buyer is in control. This basically lets you know bulls are in control of price action if you're above an anchored VWAP, okay? And below, it lets you know that the bears are in control, all right? It's just that simple. Don't have to overcomplicate it too much. Institutions are on record as, using these levels as key buy and sell moments. Right, you can see support step in here, support step in here once we get near. Support did step in here, but it wasn't strong enough to bounce us continuing higher. And what do we see? Well, we now see that the year-to-date anchored VWAP is curling down, right? It's flat at the moment, but it is starting to curl down. We see our 50-day simple moving average starting to curl down. And we also see the anchored VWAP to the all-time highs also curling down here. Now, if you wanted to look for another price level, okay, another price point, we could go back to the bear market lows. Okay, so the bear market lows are over here. Again, we're going to drop a WAP here as well, right? And now we have dropped a few WAPs. And look at how well it's starting to align with some of these price levels, right? We see it's at a key prior level. All right, this is going to be your big bearish scenario here, okay? Is your big bearish scenario is, we end up coming down towards the 1500 level on the NASDAQ, okay? Right now, there's still a lot of work to be done. So we started on that higher time frame. We saw that, there's a key zone in this level. We know that these are previous all-time highs. Again, we had that little false breakout. Then we had a little scoop and score underneath, and we really started the rally. And we know that, the average buyer in the year, the average buyer from all-time highs, they're all underwater. And something shifted in the market here recently. What shifted was a lot of the buying algorithms, okay, that were coming in, buying at these zones, and, buying at the 50 moving average and things like that. Those are now sellers. Those are now sell algorithms. So we don't have the same algorithms that were just continuously buying up every dip. You see we have these dips over here and then they get bought up, we gap up, right? See, we have these dips over here, they get bought up and we start gapping up. And we're just not in that environment. Now, we know that we do have the possibility for a little bit of a check back to potentially test the year-to-date anchor VWAP, the all-time high anchor VWAP, and the 50 simple moving average. Those three levels are going to be your key major levels for psychology, okay? They're not key levels of support resistance in the terms of, where price action has closed previously in the past. These are key psychological levels, right? And these are levels that institutions, market makers, hedge funds, they use these, right? They use these moving averages, they use these volume weighted average prices. And these are things that you want to pay attention to and be, very aware of, right? And so let's say we were to get some type of checkbacks, we know that those three levels are going to be extremely important. Okay, and if we flip it, if we start trading back above, our VWAPs and our 50 SMA, that's when we could potentially see bulls back in control. Okay. But we haven't really seen much of that, right? We had one little fake out here where sellers were not able to close price action below the all-time high anchored VWAP. But since then, it's just been straight down. Now, why are we talking about some potential bounce scenarios? Well, if you take a look here, oversold, right? And what happened the last time that we were oversold on the daily time frame for the NASDAQ, right? For the NDX, that was over here, right? And if we actually adjust the screen a little bit here so you can see, give me 1 second. We had a very, very sharp move, right? So, you see, this was October 12th, and then here, October 26th. So this was about 2 weeks of pain in the market, right? We dip below a key level. We have a little bit of a false breakdown. Remember, we were talking about false moves lead to fast moves. We have a little bit of a scoop and score. So we underscoop that key level, and then we score and continue rising. And that's what really kicked off the big major rally was the last time we were near these oversold levels. And you take a look at where we're at now, again, we are oversold. Now we're not at a super key resistance, super key support level here at the moment. I would say about 16.8 on the NASDAQ and down to about 16.4, maybe even, 16.250. All right, is going to be really, some key areas of interest from a price action support and resistance supply and demand concept, where we could see some potential bounces. We could see some potential false breakdowns, some scoop and scores in these levels for a move back up higher. Now, I want to highlight how markets typically move, okay? And markets typically move in 3-wave and 5-wave structures. So we're going to highlight that a little bit here via the SPX, okay? Just to give you guys a quick breakdown. So your 5-wave structures, those are the impulsive moves, right? Those are the moves that lead the direction of the trend and that really tell you where things are going to go. Now, we've already dropped over 5% from the all-time highs. You can see we have the all-time high VWAP. We have the year-to-date VWAP, same things that we had on the NASDAQ. Okay. Where we completed a subwave 5. Okay. So for wave 3. So we completed wave 5 of 3. And at this point, you would be expecting wave 4, okay? And then wave 4 is going to be a corrective wave, or should be a corrective wave, rather, and it would come in the form of an ABC, right? So your impulsive waves, like your wave 3s, those are going to be 5-wave structures, okay? And then your wave 4s, those are going to be ABCs, right? And so if we just zoom out a little bit, you can see the count that I've got here going a little bit, taking the S&P 500 up to about 5,600, right? We have the October 2022 lows. We have wave 1 up, wave 2 down. We had an ABC down right here. And then wave 3, right, which I said we just completed wave 5 of 3, started back over here in the beginning of 2023. So we have wave 1 up, 2 down, and we have wave 3 tops in July of 2023. Then wave 4 bottoms were the October 2023 lows, and then wave 5 here appears to be put in wave 5 of 3, here in March, April of 2024. And now we're looking for this ABC correction that could potentially take, the S&P 500 down to 4,900 to, about 4,650, okay, 4,650 to about 4,900 is where I see this correction ending, right? And we talked about on the NASDAQ the possibilities for a bounce for a couple of different conditions. And also following Elliott wave, you would expect some type of a bounce. But here's the thing, guys, real corrections, they always have a bounce. What happens and what makes it a correction is that it comes with a lower high. Okay, so we've already got a high here. We're expecting a bounce, but we're actually expecting some type of lower high, right? And that would set up the B wave. And then ultimately we come in here and make a lower low at some point in time, right? And that's what price action would look like, something like this. And that would be our correction whenever this C wave ends. Now, we don't know exactly where this ABC structure is going to go because we don't know if we've officially put in the bottom of wave A yet. So that's something that I'm watching for and looking for at the moment. We'll have to see once that develops. But anyways, that's going to be it. That's basically how you guys should be setting up your trades, setting up your structure for the market, what you should be paying attention to. I think that these simple concepts, the VWAPs, the 10-week moving average, the 50-day simple moving average, those are going to be some key things to pay attention to right now. All right, use your Fibonacci's, and then also, if you can, try to start looking at some of the structures in the market on the higher time frames and seeing, hey, are we in the beginning of a corrective phase? We know these corrections often come in ABC structures. There are different structures such as WXY, right? If we go and take a look at the SOX, this is a potential structure that I'm looking at right here, would be a WXY wave, a double combo, where we've got a clear 5 down, then we've got an ABC up, and then we've got a 5 down again, and this would be your W, right? And then X would be a correction to the upside, and then Y would be another ABC down right here. So it would be a 5-wave structure for A, and an ABCB, and then another 5-wave structure to complete the C of Y. So that's something I'm looking for and keeping an eye on. If we do start to get some type of bounces and relief rallies in the market, then I'm going to be looking for ways where I can set up my entries to potentially catch the next leg down. Because wave 3 in a market, whether it's a B or C, right? So keep in mind your C's and B's. Those are the waves you want to count, okay? Threes and C's, okay? Threes and C's. Those are the strongest waves. Those are the waves where you have the most opportunity to make the most profit, get the most juice out of the trade. And if you can spot a 1-2 setup, right? So like here, there was a 1 down, a 2 setup, right? A retracement. If you can spot a, good risk to reward ratio, let's say you're entering around here, putting your stop loss up here and you're targeting down here, it's a much bigger reward than what you're risking, right? And your analysis isn't always going to be 100% correct, but when you do and when you are correct, your wins are going to much outweigh your losses. That's going to wrap up today's video. Hopefully you guys enjoyed it, and I'll see you in the next one.